Welcome back to another episode of 5-Minute DD. Today we're talking about ticker SOFI. For those that are new to the channel, this is a series where I jump in and do a bunch of research and give kind of the bullet points, kind of trying to do it under 5 minutes. SoFi, I'm not going to be able to because there's so much to talk about with this stock. But if you're interested in these kind of videos, please check out the rest of my channel. I have a few more typically on dividend stocks if you're interested in dividend investing. And so this is the first tech growth stock that I've been doing on this series. So I am very excited. And again, there was so much to talk about with SoFi. So for those that don't know, SoFi is an American online finance company and online bank. We can see here on the 1-year chart, it is extremely beat down. Just on the year from high to low, down 78.27%. Now that is a very difficult chart to look at, but you have to think of what was going on during this time period of the market. So this is 2021. The market was all over the place, the pandemic run, and then the pandemic crash, and then the crash that we've seen the last couple of months. So it opened, this was a reverse SPAC merger at $10, and then it ran like crazy up to 25, and so now we're down about 80% from that all-time high. But the 1-year chart really shows just the devastation that we've seen. A lot of that with the market, just because SoFi was really overvalued at this point. It was not a good deal at all, in my opinion, and now we're trading at $5, which is insane, in my opinion. I've been watching this one for years. I remember when it did do the SPAC merger. There was so much going on. I don't remember if I actually did ever buy that merger. I think I did own it at one point, but now I'm really looking at buying more stock. I don't own SoFi currently, but there is so much going on with this stock. So let's jump into that. 1.2 billion in revenue for 2022. That's kind of expecting what's going to happen with Q4. They have their Q1, 2, and 3 results already. And their Q2 investor presentation is what I got all of this chart from and a lot of this information from. So the restarting of student loan payments is an insane catalyst for SoFi because they are they're big in that industry of taking student loans, refinancing them, helping people with that, getting better interest rates, and it also makes SoFi money with doing that. So that is very important. They were supposed to be more profitable the last couple of years, but they weren't because of the pausing of payments. So now they're ready to boom as payments are going to begin again and interest will begin accruing January 1 of 2023. So that's why it's part of the reason why they are expecting profitability next year in 2023, because the loan payments will be making them more money and as well as some insane growth. So they've been growing that revenue really heavily, which is great. In 2022, the revenue was only 600 million. So they have been growing revenue really well, even before payments for student loans have been required. So that is really good, and that gives me a lot more faith in the marketing team. And then jumping down to the next portion, the average SoFi customer has $70,000 in student loans, a 773 FICO credit score, and an annual income of $170,000. That's according to SeekingAlpha.com, this is absolutely so insane to me. This is one thing that when I read this, I was like, wow, SoFi's potential is phenomenal. So the average SoFi customer has 70,000 student loans. So even with the loan repayment plan that Biden is putting through, that's not even going to take a high percentage of the loans out. 70,000 is a lot of money for loans, but it also shows that this is, I wonder if they're getting higher degrees. This may be for master's students as well. And then this last portion, another reason I think that is because $170,000 in annual income is not a simple biology degree, mathematics degree, typically. There could be some areas in those fields, of course, but it's not common. So the FICO score, this is a really beneficial thing to SoFi. It shows that these people that are refinancing with SoFi are really careful with their money. They have good credit scores. They're not going to be defaulting on their loans. They make a good income. And on top of that, this $170,000 of annual income actually removes them, if they are independents, it removes them from being eligible for Biden's financial student loan relief. So that is another thing that a lot of their customers, their average customer, will not even be able to get the student loan financing help, which is unfortunate for them, but overall better for the company of SoFi because it will make them more money. The 2023 revenue target is 2.06 billion. So not exactly a 50% increase, closer to like a 42.5% increase in revenue year over year, but that is still insane. If some of these larger companies were doing this, everyone would be going crazy. So that is very hopeful insights for SoFi. This next thing I have in all caps, bank charter. This is extremely important for SoFi, and I did not know they did this until I actually researched it for this video. They have their bank charter, meaning that they are officially a bank, and so that means with higher interest rates, they can make a lot more money. And so with how interest rates are going, and they're looking like they're going to remain pretty high for quite a while, SoFi looks like they're going to be more profitable because of this. The only downside, which I'll talk about, is defaulting on loans. Now, next is our little chart that I pulled from their Q2 2022 investor relations presentation. And so this is their members numbers, which is absolutely insane. 69% year over year growth on their members. Now, that is phenomenal. That's the second highest quarter for new members. So that just goes to show that that's not even their highest quarter yet, or highest year yet, which is just insane. So they are growing very nicely. I love to see that. It gives me a lot more faith in the company overall, that they are marketing a good product and they're doing good for the people that are working with them. That's what I love to see. If you guys are interested in this, you can find all this stuff online for free. It is great. Now I'm going to jump into the cons. I already talked about it a little bit, defaulting on loans. So with the defaulting on loans, that means some people may not be paying off their loans, but it's extremely unlikely because of the Seeking Alpha article saying that these people have a 773 FICO credit score. Those are not the people that default on their loans. You cannot have a credit score like that and continue to default on your loans, have a history of defaulting on your loans. That is very telling of the people that SoFi is using to make their income and working with the loan repayments. High interest rates, kind of a negative, kind of a positive, kind of similar to the loans. If a lot of people start defaulting on their loans, it could be tough. And it could also mean, with this, it's interesting, people may be less likely to use loans, which is kind of the main negative. With the higher interest rates, they could make more money on the loans they do get, but it could also lead to a decrease in people getting loans for all different sorts of things, which SoFi is a part of. So lastly, this is not financial advice. I want everyone to know that these are my opinions and my research only. So I hope this was helpful to you. If you guys did find value in this, again, please like, subscribe, share this video, leave a comment telling me what more you want. If you're interested, drop a stock that you like and I will do a video on it. Again, it only takes me about 5 minutes. So I'm not sure how long this one took, but thank you guys if you did stay till the end. Thank you so much for watching, and I hope you guys do well in the market this year.